Hello everyone. Welcome to series of videos on lease accounting in Fusion Financials. This is the fourth video of this series, and probably this will be the last video. Okay, so in the last video, we created the lease, means the transaction part was done, and we saw that once we complete the lease creation, we can have a file attached into schedule of the lease year. And so let us that is where we stopped. So let us proceed from here. So today we are going to briefly discuss this Excel file and the accounting of the lease in this video. Okay, so I have downloaded this file from instance. So this is the file. Basically, this file gives you all the details of the financial elements with generally which is generally used by create accounting program of the lease for the lease. So at the top you will have the complete detail of the financials of the lease. This is the total. To understand it better, let me first go to scroll down where we can see the similar details for the different payment elements. So if we recall, for this lease we had three different types of payments. Let me just go back to that slide where I had created those payments. Yeah, so if you see, we created this lease contains three different types of payments: insurance, the security insurance, security deposit, and rent. So this is the three types of payments. So for each payment type, first the details are created, is calculated, and those payment details are added to get the overall payment schedule for the lease. So in the top part here, we will see, if you see here, this will show us the payment schedule or the financial elements of complete lease. If we scroll down, it will start showing the details for the different payment elements. So let us first understand the financial details of the payment elements. So first one is rent. So if we recall, we had a monthly payment of 10,000 currency units. So accordingly, now let us discuss a bit the different payment financials of the rental payment. So here we have the opening liability. Opening liability, that means the how much amount we are liable to pay vendor for this particular lease at this point of time. That means the present value of all future cash outflow for the rental. The monthly rental payment was of 10,000 currency units. So 10 into 12 will become 120,000. And it was a monthly payment. So the present value based on the 10% of the cost of capital, system has calculated the present value of complete cash flow as 114,900.47. How this one gets calculated based on the percentage? I have explained that in very detail in my another video series of videos on financial lease in fixed asset. So you may refer that video to understand more on how the present value for the future cash flow is calculated. So this is what the opening liability, the payment amount in the first month. Now, if the opening liability is this, What is the interest? So this is the opening liability in 1st April 2022. In a month, based on the interest rate, system calculates the interest expense on this principal as 824.99. So that is what is mentioned here in this column, 824.99. So obviously when we have opening principal as this and the interest accrued as this, so the closing liability in the end of month will be 115725.46, and on the end of month we are going to make a payment of 10,000, this one. So the closing liability will be the opening liability plus interest expense minus payment amount, 105725.46. This is the amount. Now this value will become opening liability on 1st May 2022. For 1 month, on this amount, based on the cost of capital interest expense will be calculated. That amount comes here. Similarly, principal plus interest minus payment will be the closing liability, 96503. So this is the amount displayed here. Similarly, the amounts will be calculated for the rest of the period accordingly. And at the end of the lease period, we can see that closing liability will become 0. So this is the calculation for the lease liability. Now coming to right of use amount. So since opening liability is this much, so for this payment element, the opening right of use is this much. Same. And every month we are going to depreciate the asset, right? So we are going to depreciate the rental amount, opening right of use also. So this is for 12 months. So this is the per month depreciation. This is what mentioned here, amortization expense. So opening right of use minus depreciation, closing right of use. We can just verify the calculation. This is what the amount is. Then this becomes opening for the next month, and similarly, and so on, these values are calculated. So this is how the rental payment, the financials of the rental payment units, rental payment template is calculated. We will refer this Excel file once more when we check the accounting, and we will see where from which value is taken for which accounting. Similarly, for the insurance, okay, it was one-time payment. No, insurance was annual payment. No, sorry, this is for actually deposit, security deposit. It was one-time payment. So payment amount is 80,000. Since it is paid in advance, so we don't have any interest expense and all these things in this case because we are paying this upfront. But obviously, right of use, this value will be prorated every month, same way as we did for rental. This is the amount for the depreciation. Coming to the insurance, it is annual payment, same kind of thing is done here. Okay. Now, once we do this calculation, so we add like opening liability is 20,000 here plus there is no opening liability here because it's payment in advance plus this one. So 20,000 plus this becomes opening liability for the overall lease. So 20,000 plus 114, this particular part. Another thing, Similarly, we calculate the right of use also. So if we see the right of use here, this is 214. It is not same as the opening liability uh, of the lease liability, because we have a payment in advance which is of 80,000. That is not part of the liability. We call the payment template definition. Yeah. The security deposit was not part of the liability, but it was part of the right of use. Insurance was part of the liability and right of use, and rental was part of liability and the right of use both. The liability, the security deposit was not part of the liability according to our definition. That is why in the lease liability, the payment for the security deposit is not considered, but that is considered in the right of use. So 134,900 plus 80,000 will make this amount. You can verify. Yeah. So hope this Excel file is clear how the different elements of the financials are calculated. Let us proceed from here for the accounting of that. In fact, we can run the accounting for all the different events in one go, but for better explanation, what I'm going to do, I'm going to do the accounting step by step for each different uh, events. So first one is the lease booking. Means we have created the lease. So we are going to recognize the uh, lease asset and the liability. So go to the task panel, click on create accounting, select the different values as per the different values for the parameters. Now if you see, this is the snapshot of the create accounting output. Now if you see here, we have 3 event types. Let me just use my pointer. We have 3 event types: lease booking, lease expenses, lease payment approved. Right now, for the lease what we have created, only lease booking event is active, and for that it is accounted. I already have 2 leads in this instance, so we can see that for lease booking the number of transactions is 3, but whereas for the others it is 2. That means for the new lease what we created, the accounting for the lease booking is created. And this is the accounting for the lease booking. Now let us see the accounting. So in fact, the accounting here is debit asset, credit liability. And since we have 3 payment elements, so we have 3 sets of debit assets and liability credit. If you can see one by one, it had done. So where from the values for this is taken, let me just quickly explain. So we can see the asset debit is 114900. That value is taken from here. Okay. Then we have offset is the liability. Next, we have asset debit as 80,000. That value is taken from this one, opening right of use. Sorry. This was the asset debit was this one, and 80,000 debit here. And in fact, I think this should not be liability, rather it should be clearing. But anyway, that is how it is. So this is how the accounting created by system, because if I'm correct, the security deposit is not part of liability, but they have taken the liability line type here. Maybe it can be as a clearing for the advances. But anyway, because that is how the finance lease works, but probably lease accounting, we have not done that. Next one is 20,000. So that is for 20,000 right of use, 20,000 lease liability. So this is how the accounting for the lease booking is created. Now, as I explained earlier, so this is the opening liability. We've already booked it. Now, at month end, we are going to create the interest expenses, right? Now, to do that, we need to run a process. So, okay, these are the details. So once we created the accounting for lease booking, the next step to create the interest expenses, task panel go to process lease accounting and run the process for process type accruals. So interest expense, interest is accrued. So that's what we are doing. So I'm running this for the lease what we created for the first period. Once this succeeds, run create accounting. Similar parameters. Now if we see lease expenses, number of transactions is 3. So the lease expenses, interest expense for the lease is booked and it is accounted for the lease what we have created. So lease what we created was this one, the lease, and this is the accounting created for the lease. Let us review this one by one. So it will have, for each payment element, there will be 2 sets of accounting. Okay, now let us check one by one. So first one is amortization debit, accumulated depreciation is credit. This one is right of use amortization. So if you see here, amortization debit and accumulated depreciation is credit. This is the amount 9575.04. Okay. Now, next one, interest expense debit, liability credit. Interest expense debit and lease liability gets credited. Next one, amortization debit 666.67 and accumulated depreciation credit. This is for the next payment element. This is the one. And since there is no interest expense, so this set of accounting, liability credit and interest expense debit, is not created for the second payment element. Similarly, for the third payment element, again, this is a one-time payment. There's no lease liability, there's no interest expense gets calculated because we have already paid it, right? So there's no expense, interest expenses for this. 1666.6. So this is how the accounting for the lease expense gets created. Now, next step, so this was the opening liability booked in the lease booking. Then we booked the interest expenses and the amortization. Now we are going to pay. We are going to make a payment for whatever the monthly payment we need to do. To do that, again, go to the process lease accounting. Now this time the process type should be lease payment. So once you select lease payment, you get multiple other parameters which will be used because this is a payment. We are going to do the payment for the whatever due amount is there. So what is going to happen? That system is going to create a payable invoices. So additional parameters comes here like export to payable, launch, import payable invoices. So submit this request. Now it has launched the payable invoice creation processes, and these are the invoices created for the lease for the month of April. So you can see we have 3 payments. So 3 invoices are created, one for rental, second for security deposit, and third for the insurance. So this invoice got created, and accordingly the uh, payment will happen in payables model. As far as lease accounting is concerned, this is what we do from the lease accounting model. After this, run create accounting. Now we can see we have 3 transactions for lease payment approval. Earlier it was 2. And this is the accounting for the payment approval. So liability debit 10,000, clearing credit 10,000, liability debit 20,000, clearing credit 20,000. For 80,000, it was not done because it was a one-time payment which was done in advance. So since it was already paid, so no invoice, no accounting is created here for the particular security deposit payment element. So in summary, we have, as far as accounting is concerned, for the lease accounting model, we have 3 different tables. Lease booking, this is used when we create asset and we debit the asset, credit the liability. Lease expenses, for this event, we debit the interest expense, credit the lease liability, and at the same time we debit the amortization or depreciation account and we credit the accumulated depreciation. And the third process type is the lease payment approval. For this, accounting is we debit the lease liability and we credit the lease clearing account. So this is what I think it was helpful. So this is what I had to share for the lease accounting model in Fusion Finances. Thanks a lot for watching. Bye for now.